Interest rates are insane. I'm sure if you're looking for a house right now, you think everything's expensive, and it is. But there's one thing you can do to actually save hundreds and hundreds of dollars and get a lower interest rate today. And that's what we're going to be talking about. And stick around to the end because you're going to see the actual true cost breakdown of what you can do, where instead of paying exorbitant amounts down on the house, you can pay a smaller fee to get a much lower interest rate and make your monthly payment way more affordable. I'm Reed. I help you land your bigger, better house in Spokane. If you want to contact me, all my info is below. Simply text me and say, hey, Reed, I'm thinking about making a move in Spokane. Let's chat. But today we're going to look at the breakdown of a $450,000 house and a $650,000 house and how you can get those monthly payments far, far lower. Just remember, I'm a realtor. I'm not a lender. These are estimates that we're working with. So let's get started. So let's start with a price of $450,000. It's slightly above the average price in Spokane. And we're going to take a look at what the monthly cost would be. So let's just look at $450,000 and you do a down payment of 10%, which is $45,000. Current interest rates today, December 16th, 2024, we're about 6.95%, and you do a 30-year mortgage. Your monthly payment is $32.78 per month. There's a couple things here. We did a 10% down payment. Some people do less, some people do more. So if you want your mortgage payment to go down, let's see what 20% would be. So if you did 20%, it'd go down to $2,800. That's a huge difference. Saves you about $400 per month. Obviously, that's close to $5,000 per year. But you might say, hey, Reed, maybe we don't want to put $90,000 down, but we have a little extra cash. What can we do? So let's put it back to 10%. Here's something that's really interesting to look at. So it's $32.78. We can go over here. There's companies right now, they're doing what is called a rate buy down. Basically, you take money up front and buy down your interest rate over the course of the loan. So let's see how big of an impact it can make right now. So at $450, you keep your 10% down, and let's say you have some extra money and you want to see, okay, what can we get our mortgage payment down to? If you go into here and you view details, this is 10% down. You have a regular, average to above average credit score. And look at this. If you paid $9,000, so I'm not asking you to pay $45,000 more to get it down to $2,800. I'm asking you to pay $9,000 more to get down to a 6.125, which is far lower than the average mortgage rate. Your total would be $2,551. So you would go from almost $3,300 to $2,500, which will save you almost $800 per month, which is going to be over $9,000 every single year. I don't know about you, but if I'm looking to buy a house and I'm looking between paying $3,300 a month for that house, and I can pay $2,500 and all I have to do is pay $9,000, I think that's a score. In a second, we're gonna look at that break-even point because the $9,000 may not make sense if you're planning to move in like 1 to 2 years, but if you plan to stay in your house 5, 10 years, you'll be so far past the break-even point that you will be saving money each and every month, which is fantastic. Let's look at another popular price point in Spokane at $650,000. If you were to pay 10% down, that's $65,000, you're gonna pay $4,700 per month. And when I talk to people, $4,700 is usually more than people are wanting to pay. So I totally understand it. What people are doing right now is maybe they bought before prices increased like crazy and they have a lot of equity. So people are putting a lot down on these properties. Sometimes people are willing to put $100,000 to $200,000 down. So if you put down, if you put down $200,000, you'd be down to $3,500 a month. But $200,000 is a ton. So let's just keep the 10% here at $65,000. We're at $4,700, but let's just see what a rate buy down could do for your interest rate. Right now we're at $650,000 purchase price, 10% down. You have your credit score of 760 to 779. Obviously, again, I am not a lending professional. Just use these tools to follow the math and help people kind of figure out where they're at before they talk to a lender. We're at $4,700 right here, and we can get down to about $3,700. We will save $1,000 every single month for just the cost of $12,000. So right now, you have the opportunity to buy a $650,000 house, put 10% down, which is $65,000, and pay $12,000 up front, right? So that's on top of your down payment, but $12,000 up front, and your mortgage will be just under $3,700. So you will be saving $1,000 every single month. And so if we look at the break-even period, this is $12,000 and you're saving $1,000 a month. You will break even in just over a year. If you're living in your house for 5, 10, 15 years, that first year you're saving all that money to get to the break-even point where you shelled out $12,000, you're gonna save $12,000, you break even, And now everything else is gravy. The next 5, 10, 15 years, you're going to save $1,000 every single month on your mortgage, and you're going to save in interest because your interest is much lower. So these are some fantastic options. I know a lot of people think that they can't win right now in the real estate market because rates are so high, but you're not looking at all of the options. So you can either pay more on your down payment, which is great and can save you money. But this I've found is the most bang for your buck if you plan on living in a place for multiple years. Let's just look at this one more time. So we go back to 450. Let's just see, paying $9,000 at a 10% down payment, we got the payment down to $2,500. Let's just see how much you would have to put down to get it down to $2,500. 90,000? Nope. How about 110? Nope. How about 140? Okay, about 140. So if you have $140,000 or $150,000 to put down on a house, sure, go for it. That's 31%. But if you don't have $140,000 and you're looking to make your mortgage more affordable, this is your option right here. Pay $9,000 to buy down your interest rate and you'll get the payment down to $2,500. People are not looking at the entire game. By paying $9,000 up front, you're able to make a huge difference and get to $2,500 a month. Let's look at the difference between the 650. So let's say you want to get your payment down to $36.91. How much money would you have to put down? 220? Okay, 200. Okay, so about $200,000. So you could either put $65,000 down and pay $12,000 lender fees to get down to under $3,700, or you could pay basically $135,000 more dollars down to get that same price. And obviously, I know that there's two camps. One camp is, I just want to get my monthly mortgage payment down. One camp is, I want to pay my house off as fast as I can. So I understand that there's two different camps and two different ways to go about it. But if I'm you and I don't have $200,000 to put down on a house and I only have 65 with some extra cash laying around, I'm definitely going to put the 65,000 down and I'm going to buy down the rate for $12,000 so that our mortgage payment is far more affordable. So there you have it. Honestly, people get so bummed out because they have these big dreams and visions of, oh, this is the house I want, or we've been looking online and we found this great house. It's $550,000. It's going to be perfect for our family. And then you go and look at the numbers and they can only afford a $425,000 house. And then it's heartbreak because they have all these dreams and you already see yourself living in that home with your family and making memories and things like that. So before you even start, go through one of these calculations. I'll drop a link below in the one that I like to use, but go through these calculations you're comfortable paying on and talk to someone like me who can connect you with a great lender to actually get the real facts, because these calculations will give you good intel and good numbers, but you're not going to know truly how much you can afford or how much the bank will lend on until you talk with a lender, get those numbers. So this is a great starting point. It puts things into perspective. It shows you what the cost could be. And then also what I love to do is look at the buy down calculator, because right now when interest rates are a little bit higher and you have a little bit extra money, that's to buy down your rate for the whole course of the loan rather than just put 10,000 more down on your house, because that'll save you $40, $50 per month instead of hundreds and hundreds and up to $1,000 per month like we saw in the example. So use someone like me who can connect you with a lender and help you actually save money on your house and make things more affordable and approachable and attainable for you. So if you're looking for a home in Spokane, you want to land your bigger, better home, all my contact info is down below. Just simply text me, say, hey, Reed, I'm looking to make a move in Spokane. Can we get on a call? Honestly, I would just be so grateful if you liked and subscribed to this video, because I do 2 of these every single week and I'm helping you, the person who's looking at buying and selling homes in Spokane. I'm helping you figure out the real estate market, equip you with information to make better decisions, and hopefully you learn something along the way.